In this presentation, we will take a look at vertical analysis calculations. We're going to have our information on the left side. We're going to enter that information into the blue area on the right side. The information on the left side includes the financial statements, which include the balance sheet and the income statement. We got the current year and the prior year for the balance sheet and the income statement. We're going to use that to construct the current year and prior year vertical analysis. Also note that we do have the current year first. That's going to be a convention, but it often is the case. And you might have the thought in your head that you would think you would read this kind of from left to right, like a story, like the old year first, and then you go to the new year at the end, like the end of the story is the current time. But no, we often do that in reverse here because we want to have the most relevant data or the newest data first because, financial analysis are impatient people typically, and they want the latest stuff first typically. So that doesn't have to be that way, but oftentimes you're going to see that data in that format. Just make sure that you recognize that as you go through the calculations and the analysis. Now we're going to do this for both the balance sheet and the income statement, but note that the income statement is the one that we want to spend our most time on here because this is the performance statement. We're trying to consider how things are doing over time. How did we do over the last year? Well, we're going to obviously look at the income statement because that's what's considering the performance, how we did. That's going to be measuring the temporary accounts. So here we're going to go with the current year and then the prior year data. This time we're comparing and contrasting vertical analysis to the horizontal analysis. Vertical analysis is comparing everything to itself. So we're comparing everything to basically a total within the same year, as opposed to horizontal analysis, which is comparing year over year. So horizontal analysis, we're typically comparing horizontally from like a prior year to the current year. We'd be comparing this to that. We're not comparing this to that here. What we're doing is comparing everything within the current year vertically, all in the same column, vertical analysis. And so this is going to be a different type of analysis, also very useful because once we do the vertical analysis and we consider how to do this within percentages, representing in essence the financial statements, common size financial statements, sometimes called in percentages, then we can use those to compare to other companies that have different dollar amounts. So if we want to compare, in other words, our performance, how our income statement looks, as compared to a company that is much larger, possibly, in order to benchmark to that company, the dollar changes won't help us. I'm not going to be able to look at this and say, hey, I can take a look at this and I can compare it to some huge company and basically draw some insights into how we're doing as compared to them in our relative perspective in the market. Can't do that, but we could do that if we were to break down our information into ratios. Why? Because these dollar amounts mean nothing when I'm considering them against possibly $1 million dollar amount. But the ratios, those can mean something. And this, again, applies not just to financial accounting, but to any type of thing that you're trying to measure something. Oftentimes we run into this problem and we have to basically common size something. The way to do that is with ratios. Really, really good skill to have, and because it's applicable in a lot of areas. Now, on the income statement, what we're going to do is say, hey, what's going to be the main thing we're trying to do on the income statement? Revenue generation. That's what we're doing. That's what we're trying to do. That's what the whole income statement is for. We've got revenue, we've got expenses, and all the expenses are there in order to help us to generate revenue in essence. So what we want to do is compare everything to revenue, or sales in this case. What revenue is being called here on the income statement, sales. So we're going to compare everything to sales. So on the top line, we're going to say this is just going to be simply equal to the current year sales divided by the current year sales, or 100%, of course. So 100% on the first line. On the second line, it's going to be equal to the cost of goods sold divided by the sales. So now we're comparing it to sales. Everything's being compared to sales. So cost of goods sold is 61.5% of sales. And we would expect that to be fairly high given the fact that the cost of goods sold represents the inventory, which is usually kind of our highest expense. That's why we break it out separately. Now, the gross margin is going to be equal to the 88,186 divided by the 229,234, or the 3850. And that, of course, could also be calculated as the 100% minus the 61.5, or the 38.5. So we're going to keep on going down here. We're going to say the research and development is going to be the 11,581 divided by the 229,234. That's going to be the 5.1. Then we're going to say that the selling and It's going to be the 15 divided by the 229,234. That's going to be the 6.7. And then we're going to take the total operating expenses, the 26,842 divided by the 229,234. That's going to be the 11.7. And of course, we can see that as well if we were to add up the 5.1 plus the 6.7, 11.8. And there are, of course, going to be rounding differences here within Excel. If we were to see this, this isn't an exact number. Rounding's always going to be an issue. And then we have the operating income, which is going to be equal to the 61,344 divided by the 229,234. And then we have the other income, which is going to be the 2745 divided by the 229,243 or 234. Then we've got the income before taxes, which is equal to the 64,089 divided by the 229,234. And then the income taxes, which is going to be equal to the 15,738 divided by the 229,234. And one more time, the net income is going to be equal to the 48,351 divided by the 229,234. So there we have it. Now, is there an easier way to do this? Can we do this faster? Can we use the autofill? We can, but it's a little bit tricky. So let's do that. I'm going to delete these and we'll try to use the autofill. I'm going to do it one time and see that it's not going to work and then try to figure out how to make it work. So we'll put our cursor on the autofill handle here and we'll drag it down one time and it'll say 100% again. That doesn't seem right. Why? Because it took this one but divided by itself. Cost of goods sold divided by, that's not what we want. We want cost of goods sold divided by the net sales. So cost of goods sold. So I don't want net sales to move down when I pull this cell down in a relative reference format. We only want the cost of goods sold item to move down. So I'm going to delete this and say, well, how can we do that? If we double click on this, we've got the same, the same number on the numerator and the denominator. The numerator I want to move. The denominator I want to remain the same. So what do we need to do? Absolute reference the denominator. How? We could push F4 on the keyboard or simply put a $sign before the B, a $sign before the 38, and then enter. Then we should be able to autofill this down. I'm just going to do it all the way down because I have confidence that it's going to work. So I'm just going to do it all the way down because we're crazy like that. And there it is. It's going to be the 6150. So if we double click on any of these and we say, does that do what we think it should do? It does do what we think it should be, or at least what I think it should do. I think it's doing what it should. So there we have it. And once again, we could see these now because the current year statements in terms of the dollar amount doesn't really allow us to compare to some other financial statement. But if I was to compare to some other financial statement and break down their information in a common size or vertical analysis format, then I can say, okay, how do we line up just in terms of ratios, percentages with regards to the cost of goods sold as compared to sales? If I have the same like hamburger shop as McDonald's, how is my cost of goods sold compared to my sales as relation to them, even though they're making millions of dollars or whatever, billions or what, how do we compare to them on a ratio standpoint? We might still be able to glean some information relevant to us from that. And we have the research and development. Obviously, cost of goods sold is the biggest component, and we could see that more clearly than you can with the numbers as well, just from our own internal purposes. If you just see these numbers, you're not going to be like, well, which one is the most relevant? Well, here, 61% of sales is the cost of goods sold. You can see that pretty clearly. The research and development, 5.1, selling, 6.7, and then the operating income, and then, of course, the income before taxes, other income. So obviously, in our income statement, by far, the largest amount, which is typical from someone that sells inventory, is going to be the 61.5, which is the cost of goods sold. Note, you can also do, in essence, a pie chart. So we'll put one in relatively quickly. And what we want to do is basically pick up the selected data that we're going to need over here. In order to do that, I'm going to hold down Control as we select the data. So we can go through here and we're going to say we're not going to pick up net income. That's at 100%. We're going to look at everything else basically except net income, because everything is in essence compared to it. Now we could pick up the subcategories, or we could get into some more detail on it. I'm going to pick up cost of goods sold. So cost of goods sold is that 61%. And then we have the gross margin. I'm not going to pick that up because it's a subcategory. We have the research and development, the selling, or we can just pick up the total operating expenses. I'm going to pick up the total operating, which includes the research and the selling. So I'm holding down control, picking up the name and then the percentage amount. And then we have the operating income. That's a subtotal. Not going to pick that up. Other income, I'm going to pick that up. That's going to be a component. And then the income before taxes, another subtotal. Not going to pick that up. And then the income taxes, we need to pick that up. And then the net income is going to be part of the calculation as well, because the net income is going to be necessary in order to get to basically the comparison, the full comparison, the 100% for the sales. And then what we'll do, I'm letting go of control on the keyboard. We're going to go to the Insert tab up top, and then we're going to go to the Charts group. We're going to look at the pie chart, and we can just basically select whichever one we want. I'm just going to take the standard pie chart here, and there we have it. I'm going to make it a little bit smaller. And then you can kind of represent this data in terms of a pie chart. Cost of goods sold, obviously representing the largest component with relation as compared to the income. This is another way to basically visualize the data, which can be useful. Now let's do the vertical analysis here in terms of the second year, or in terms of the prior year. So we'll do the same thing for sales. We're going to say this is going to be the prior year sales divided by itself for the 100%. Cost of goods sold will equal the cost of goods sold divided by the sales amount for the 60.9. And then we're going to take the gross margin divided by the sales. And of course, we could, when you see these subtotals, you could kind of double check yourself by taking the 100 minus the 60.9, and it should come out the same as well. So you can do it either way. Double check yourself there. So then we're going to say this is the 10,045 divided by the 215,639. This is going to be equal to the 14,194 divided by the 215,639. This is going to be equal to the 24,239 divided by the 215,639, and so on and so forth. Let's go ahead and see if we can copy this down. So I'm going to delete this. Autofill. Remember that if we autofill and you're not sure if it'll work or not, autofill one time down. I'm gonna put my cursor on that fill handle. Autofill one time down. Doesn't look right. Something's wrong. So what I want is for one of these to move down, but not the other. And therefore, I want the top one to move down, but not the bottom. So I'm going to delete this, and I'm going to think about it and say, okay, what do I want to happen here? Well, I want the C38 on the top to move down, but the one on the bottom, I want to remain the same. So this one I do not want to move, and therefore I'm going to absolute reference it by selecting F4 or putting a $ before the C, $ before the 38, and enter. Then we can put our cursor on it, autofill handle, and I'm just going to autofill all the way down because we're confident that's going to work. And there we have it. And then we can double check on it by double clicking on any item, taking that item divided by the sales amount, and that gives us a good check. Now we can compare from a common size standpoint year over year and say, okay, sales obviously 100%, cost of goods sold is a little bit less, but pretty close. Gross margin pretty close. Research and develop pretty close. It all looks pretty close. So year over year from a common size standpoint looks pretty close between the 2 years. Let's see on the balance sheet, we could do the same type of analysis. We can say, in this case, we're comparing everything to what's the most important thing on the balance sheet in terms of assets, the total assets. So with regard to the balance sheet, then we're going to be comparing everything to total assets. So same kind of thought process, but you kind of want to think, okay, what's the most important number? What are we going to compare everything to? Obviously here we're going to compare everything to the total, and that'll make basically the ratios all add up in essence to the total. So let's think about that. We're going to say, all right, we're going to compare everything to the total assets. Let's look at cash. We're going to say of cash, we've got the 20,289 divided by total assets. 375, 319, that's going to be 5.4. And note, again, we can compare this to other types of companies, start to think about, well, how much cash do they have? And you can do this on your own personal books as well. You can start thinking, well, here's how much money I have. Here's my investments. How much cash do I have as opposed to money in stocks or money in other areas? And we could start to break this out on a ratio basis and then compare our ratios to someone like a very famous investor or something like that, and try to see if we can kind of match, glean some insights with their kind of strategy, not using the dollar amounts because they mean nothing to us, but we can't glean anything from that. We can't see what's going on, but from a ratio standpoint, we might be able to mirror a little bit of what's going on and act in a similar way and increase our performance in that way, or get some insights into how things are working. So we're going to take the short-term investments divided by the total, and that's going to give us the 14.4. Accounts receivable will be equal to the 17,874 divided by the total, the 375, 319, and then we're going to take the inventories, which is going to be the 4,855 divided by the total. Then we have the other receivables, which is equal to the 17,799 divided by the total. Then we're going to take the other current receivables, the 13,936 divided by the total. Oh, I missed the total. Dang it. So we'll take, and then we'll divide it by the total. And then the total current assets is going to be the 128,645 divided by the total. And of course, you could sum these up. If I was to add these, I could just select them within Excel, and we get to that 34.3, as we can see in the sum area in Excel. So then we can keep doing this because it's great. It's good times. We got the long-term market. So we'll take that divided by the total. And then we got the property, plant, and equipment, the 33,783 divided by the total. Goodwill is going to be equal to the 5,717 divided by the total. And then we've got the intangible, which is going to be equal to the 2,298 divided by the total. And then the non-current assets, which is equal to the 10,162 divided by the total. And then, of course, the total assets are going to be assets divided by the total assets. And that's going to be the 100%. So there we have our ratio breakout. Now, note once again that you could take the total assets here and add these up for the 100%. There's the 100%. To double check that, to verify that information. Now, of course, you can break this out into a pie chart type of information as well. So if you wanted to think about, a pie chart on this and try to think about your investment portfolio and say, hey, here's my total assets, here's how I broke them out. And you could think about this in your investment portfolio as well, or in your total assets for the business, how much, what type of areas are my business assets. So to do that, again, we're going to select the actual accounts. I'm going to select the account. I'm going to select the percentage. Now, note, you could actually take the dollar amount too, but we got the percentage broken out, so I'm going to take the percentage and I want to just show that we could take these non-adjacent cells here. So we could take, all the dollar amounts and the percentages, and we'll pick these up. And I'm holding down Control to do this. I'm not going to pick up the subtotal, so I need to take this one off. I'm not picking up the subtotal. That's going to throw things off. It'll count the numbers twice. I'm going to pick up the long-term market securities, property, plant, and equipment, the goodwill, the intangibles, and then the non-current. We're not going to pick up the total. And then we just simply make the pie chart. So we're going to say, all right, insert the pie chart, charts, pie chart, standard pie chart. I mean, you could do like a cool one like this if you want. And there we have that. And we could say, all right, well, most of it, the highest percentage we have, the highest amount here is, of course, this dark blue, which is the long-term market securities in our total assets. And of course, we can consider whether or not that's going to be a good strategy for us to have a lot of our current assets into the long-term market securities, and we can compare that to basically other types of companies. Note that you don't need to have the ratios to do this kind of pie chart analysis. You can also just take the data here. If I highlight this same data, and for the current year, it'll do the relative ratios for us. So I'm not going to pick up the totals again. I'm just highlighting that data. Then I'm holding down Control. I'm going to highlight this data, not picking up the totals. And then I'll just go to Insert, Charts, Pie Chart. And let's do just a normal pie chart this time. And so there we have it. So basically the same pie chart, that the system now making the percentages for us, right? The system is basically making out the percentage to make the pie chart, which is in essence what we did over here as we entered this information. So there we have that. Also note that if you had a pie chart such as this and you wanted to basically see the percentages of it, and say you made this pie chart without the percentages and you wanted to see the breakout, you can go to the designs up top. So if you click on the chart tool, designs, and then the styles, and you could select some styles, or that, you can do this in a couple different ways, but you could select styles here that of course have the percentage breakout. So if you select the style that has the percentage breakout, it'll give you more detail. And there's other ways that you can format these percentages. So once you have these percentages laid out, you can basically go in and format these percentages. Back to the data. We're going to do the same thing for the liabilities and equity. So when we go to the liabilities and equity, the most important number, again, is the total liabilities and equity, which is equivalent to the total assets. So we're going to compare everything to the total, to the bottom line again, including, this is the key point for this area, we're including the total for both liabilities and equity when we do this type of analysis. So we're going to say, all right, here's the accounts payable. This is going to be the 49 divided by the total, the 375, 319. This is going to be equal to the 25, 744 divided by the total, the 375, 319. This is going to be equal to the 754548 divided by the total, 375, 319. This is going to be equal to the 11977 divided by the total, the 375, 319. This is going to be equal to the 6496 divided by the total. And then, of course, we have the total liabilities, which you could take by adding these up, as you can do in Excel by selecting them, 26.9, or same process by saying equals that amount, the 10814 divided by the total, 375, 319. And repeating this process, the 2836 divided by the total. And then we have the 97207 divided by the total. Then we have the 40,415 divided by the total. And then we have the 241,272 divided by the total. And then we're going to go down to the equity, which is going to be equal to the 35867 divided by the total. Retained earnings, which will be equal to the 98,330 divided by the total. The accumulated other comprehensive income divided by the total. And finally, the total equity divided by the total. And so now we have our common size income statement. Obviously, the total divided by the total will be 100%. So that's going to be our common size type income statement. We can basically double check that because we can highlight these items. That adds up to 100%. So there's our total at the 100%. Notice as we're thinking of this total down here, we're thinking of basically that's equivalent to the assets. In other words, the assets are up here. This is what we own, broken out what we own. This is basically who we attribute those assets to, who has claim to those assets. So as we go through these, we could say, okay, 13.1% of the total equity and liabilities, or in other words, reflecting total assets, is basically owned by or attributed to accounts payable, right? A liability, a third party. Accrued, and this is going to be 6.9 accrued expenses, deferred, and then the total that are being attributed to current liabilities, 26%, and long-term liabilities, 25%. So total liabilities, if we consider this, 61.3% of our assets are basically attributed to third parties at this point. And then the rest of it is, in essence, attributed to the owner, or the net value of the company, assets minus the liabilities here of the 35.7. Now we could do the same thing for the prior year. This time, let's try to use the autofill feature. So we're going to say this equals the 20,484 divided by the total. And then we're going to say, can I autofill? Whoop, something went wrong there. Let's do that again. This equals this number divided by the total, the 321,686. Now let's see if we can autofill that down. I'm going to do it one time because I don't think it's going to work. There's going to be a problem, and I'm going to check it out, and then we'll analyze it and we'll fix it. So we'll autofill this down, and it says there's a problem. If we double click on it, we'll say, well, that did what we wanted it to, but this one didn't. It went down. We don't want it to go down. I want that one to stay right there. Why doesn't it stay right there? Because it's doing the relative reference thing. Okay, well, how do I make it stay there? Well, we're going to use an absolute reference. I'm going to double click on it and say that this numerator, C5, I want that to remain the same. This one, C5, I want it to move down, remain the same. And this one, I want it to stay at C17. I don't want it to change. So what we're going to do is say F4 on the keyboard. One way you can do it is select F4 on the keyboard, put a dollar sign before the C, a dollar sign before the 17, enter. Now we can autofill it down. I'm going to put my cursor on the autofill handle. I'm going to go all the way down because I'm totally confident this is going to work. So I'm not even going to check it. We'll go all the way down, and there it is. Now, if we go down, note that this does work, but there is kind of a problem. If I double check on it, I can say, yeah, that does what we want. All these assets are doing what we want. That's doing what we want. But if I go down here to the liabilities and I double click on something, it looks a little bit backwards. It's taking this number divided by the total assets. And I'd rather have it be divided by the total liabilities and equity, although it doesn't really matter because they're both the same. So just note that you might keep it this way. If you see this, if you see it formatted this way, or if you format it this way, the numbers will they'll be the same because total assets is equal to liabilities and equity. But it could be confusing if you were to give this to someone else when they're thinking about the vertical analysis. It should be compared to the total liabilities and equity. So if you want to clear that up, then of course we would just delete the second. We would only do that for the assets, and then we'll do the same thing for the liabilities. I'm going to say, all right, liabilities is going to be equal to the 37294 divided by the total liabilities and equity, which of course is the same as the total assets. Enter. I'm going to double click on that. I want to autofill it down, but this second one, I don't want it to move. Therefore, I'm going to select on the keyboard F4 or put a $sign before the C, a $sign before the 34. Put our cursor back on it on the autofill handle and go all the way down to fill that down. And if we double click on this, then we can see it does what we want. We could then go back through and delete anything that we don't want, like the 0 here. And there we have it. Now we can also double check some numbers. Like if I wanted to highlight these and say, does that add up to 32.2? It does, right? If we want to go down here and say, okay, the liabilities, here's the current liabilities. If I add those up, 27.6, that looks right. We can also go through here and format this a bit if we want to put underlines, such as the underlines here, home tab, font, underline. If we want to put, underlines or double underlines under here, home tab, font, double underline. So I won't go through all the formatting here, but you can go through and make it look nicer if you so choose by entering that formatting information as well. If we were to compare this data, then we can see the relative relationships to the totals for these two items, and we can see we have fairly close relationships. And anytime we see a fairly big difference on a vertical analysis type of scenario, then once again we want to go through there and say, okay, what's the difference? Why is there this big difference between the vertical analysis and then we can basically log down and explain to ourselves what that difference is, and we're more likely to get some insights into the company or what's going on with the company or some decisions that have been being made or what direction the company is going.